Joining me right now, Surevest CEO Robert Luna. Robert, good to see you. I just love that sound from Donald Trump because I think GDP is an important thing, and people need to recognize when our economy is doing great, we ought to know about it. And I have a feeling we will under this president. Am I right?
Yeah, he's not one to keep things to himself, right? And 4, 5, 6% GDP.
And he likes numbers.
I mean, you can see.
He
likes numbers. Yeah, and I think you're seeing that in the market, Trish. I mean, eventually that will create a new set of worries. We'll transition from unemployment worries and deflation worries to now being fully employed and now having to worry about wage inflation and those types of things. But those are high-class problems, right?
Indeed.
But, you know, what you're looking at is, you know, what we talked about last time I was on the show, the unbelievable resiliency of this market. And I was saying last time I was looking for a 5 to 6% correction. And I may be wrong because what you're seeing is this market is so healthy, Trish, that the underlying market is just basically rotating from sector to sector. So what we saw is we did get that 5% correction in tech. Right. We saw 5% correction in tech, hit the support line, and now we're rallying and it's leading the market today. Very, very healthy market, and I expect that to continue. Why
do you say this is a healthy market? Because, you know, there are those that disagree and feel like it's overvalued. What causes you to say things are so good, so healthy right now, Rob?
Well, as a money manager, I have a wealth management firm. So, you know, part of my job is managing globally diversified portfolios for clients, and I've run those for almost 15 years now. And the idea is we're diversified. We have money in Europe, emerging markets, real estate, obviously in the U.S., and it's probably the first time in my career where I've seen all these things, from the economic indicators across the world to the stock markets themselves, the industry sectors themselves. Everything's doing well at the same time. And like I said, being a diversified investor, when one part of the portfolio does go back down, we're seeing other things ride and take its place. So as a diversified investor, which most retirees should be, you're really getting paid now for that diversification and patience. So,
okay, how much does tax reform factor into it? If we don't get tax reform?
Well, if we don't get tax reform, I think the upside in terms of the U.S. stocks, the S&P 500, is pretty limited, maybe 3 to 4%. But then, you know, we've talked again about what is the true PE of this market. And if you see a 20% corporate tax rate, it's really not as expensive as people may think it is. Yeah. Also, when you look at the 10-year bond, very low interest rates. So stock market, in my opinion, looks very healthy right here.
All right. We like hearing that. Rob Luna, thanks so much. Good to see you.